Hello guys, it's Dale here. In this video I'd like to address a question I got from a member of my trading course. The question was about swing trade that we had with our members. The swing trade was on the Australian dollar, Canadian dollar. You are looking at daily chart of the Australian dollar, Canadian dollar, and the swing trade was based on this volume zone which formed within this uptrend. So this was based on a trend setup, and this was a long level which I published in the members area. So this was the trade entry. When the price hit that level, this was the trade entry. Stop loss for this trade was in here. It was placed in here because it was behind heavy volume zone and also behind this little swing point. So that's why I placed the stop loss here. Now, what I teach in my course is that when you are doing swing trades, which means long-term trades, you want to use risk-reward ratio at least 1. But what I recommend is using higher risk-reward ratio, ideally 1 to 1.5 or 1 to 2. This is what I recommend. I'm having better results like this. All right, better results than using risk-reward ratio 1. Now, the question was about take profit for this trade. Where was the ideal place for the take profit? What I marked here, those 3 lines, are take profits with, this would be risk-reward ratio 1. This would be risk-reward ratio 2. I mean 1.5. Sorry about that. 1.5. And this would be 2. Right? Now, if you remember, in one of the videos which I sent you, I think it was maybe like 2 weeks ago, there was a video about ideal take profit placement. And that's also a thing that I teach in my volume profile course. And what I teach there is you want to place your take profit at the beginning of a heavy volume zone. So if you use the profile like this, then it will show you how the volumes were distributed in that zone where the price was coming towards that long level. You can as well use the profile like this, which makes it way easier to read. And as you can see, it actually shows that the heaviest volumes throughout this whole zone, and also, by the way, throughout this whole year, were traded here. This is the point of control where the heaviest volumes were traded. But you don't want to place your take profit there. You want to take that profit before the price reaches that heavy volume zone. I mean the peak of the heavy volume zone. So you want to place the take profit in here. Right? I hope that you can see it. This is the best place for the take profit. The reason is, this is the beginning of that heavy volume zone, which is a risky level because this is a yearly point of control right here, and it could turn the price, could work as a resistance, right? That's why you want to exit your long trade here before the price reaches this heavy volume zone. So that's why the ideal take profit was in here at the beginning of that heavy volume zone. As you can see, the price reacted very nicely here. And also, if you look at the risk-reward ratio, this is somewhere between 1.5 and risk-reward ratio 2. So that's also in line with what I teach in the course, to use this risk-reward ratio for the swing trades. And there's also one more thing that makes this ideal place to quit the trade, and the thing is the first deviation of a VWAP. That's the gray line, this one, this gray line, and as you can see, it's very close to this level. And when the price is moving below the first deviation, it tends to react to it, like for example in here or in here, right? Price is below the first deviation, makes a pullback and a reaction pull back to the first deviation again, and a reaction. So in this case, again, there was a pullback to the first deviation. The price didn't quite reach the first deviation. It missed it by a couple of pips, but still there was a reaction. So the first deviation was another reason why to quit the trade in here, right? Now you can see it better. Let me zoom it in. So this is the heavy volume zone. This is the beginning of the heavy volume zone. This is the long. This is the ideal place to quit the trade, right? Close to the first deviation and at the beginning of that heavy volume zone, and at the same time somewhere between a risk reward ratio 1.5 and risk reward ratio 2, which is recommended risk reward ratio for this kind of swing trading that I teach in my volume profile trading course. Alright, so this was, in my opinion, the best way to go about picking take profit for this trade. You can use this logic for any other trade. It's not just about this one, so what I've showed you here is pretty universal. Alright, so that's about the trade analysis. If you guys would like to join us, trade with us, and get proper volume profile education and proper volume profile tools, then go to my website, which is trader-dale.com. Click this button which says Browse Courses, and you can join us in here. There is the Elite Pack, which focuses on volume profile trading. And if you are interested in order flow, then in here, this is the order flow pack, which focuses on day trading with order flow. So that's about that. Thanks for watching the video, and I'll see you next time. Until then, happy trading.